Good morning. It is May 31st. I'm Eric Spanik. This is Damian White. This is the Gold Spot. Okay, so we're back here again talking about the debt ceiling. This is a recurring Groundhog's Day type of piece of political pawn, if you would. Every single time an administration comes across, we come back to this. Now, this time it's a little bit more significant than normal because after COVID, we had bumped up that debt ceiling to a significant level, about 40% more than we normally would spend over of what we actually bring in. And here we are today, and it seems as though the Republicans and the Democrats are very happy with the legislation that they're going to put in front of us here very shortly. Damien, maybe you can elaborate a little bit on that.
Yeah, well, I really don't think very much has been accomplished, except we just moved the goalpost. We're really starting to see exactly what they mean by the swamp. Everybody's entrenched in it. Republicans and Democrats, they're both kind of calling a victory for this. And really, that's probably because we didn't go into default. We didn't miss any payments. We've only done that once before, which was in like the 70s. And so this whole thing is just expanding the fiscal irresponsibility of the United States, and it's showing it to the world. It's probably going to continue extrapolating this dedollarization for the rest of the world because they see that the irresponsible spending and political nature of the United States as well. But I think the inflation aspect of it is we're going to see it go into overdrive here because this printing is not stopping. And like you said, they're not pulling back even the emergency spending measures that they put for the quote pandemic. So we're at the highest level of spending of all time. And by the time this 2 years is up, it's supposed to freeze. It was supposed to freeze spending. So they didn't reduce anything, but just freezes. They didn't increase. But in reality, all the social programs, everything like that still has inflation built into it. So spending actually does go up. We're going to be over 35 trillion in short order. And what is it, next year?
Yeah.
So yeah, it's a problem.
So let me ask you this. So we got two ways to kind of like curb inflation, right? We can either slow down spending or we can raise rates. I mean, slow down printing, that is. Raising the rates is supposed to slow down spending. But then on the other side of the aisle, we're just going to keep printing and keep spending. How do you see this affecting rates moving forward?
I think that the problem is right now is that the market was anticipating that the rate increases had already slowed down the economy enough that we were going to start cutting rates in July. Okay, there were going to be 3 or 4 rate cuts for the remainder of 2023. Now that they've done this, they've pushed this out. We're expecting another 0.25% rate increase in July, and the market shifted those rate cuts to 1 cut in December of 0.25%. So whether we see that happening, it looks like the real interest rate structure is going to be what they call higher for longer. Okay, so they're going to keep them up there because they're not seeing that reduction in jobs. Today, we just had numbers came out that the available jobs on the market just passed 10 million. So companies are still trying to hire. So the Federal Reserve raising rates is not meeting their end goal of reducing job employment. And that's it. With everyone has a job, everyone's spending, going to keep buying, and keep having inflation. Now, a lot of the goods purchasing has reduced a little bit, but people are still spending. And that's putting the Fed between a rock and a hard place because if they can't get the employment down, they're not going to be able to get inflation down. And now with this new debts, I mean, they're spending just as much. So I think the Fed is going to have, it's going to be on Congress now because Congress just dropped the ball. They did not reduce spending just like the Federal Reserve Chairman had asked them to do. And so now he's going to have to keep the rates longer until I'm afraid they're going to break something. They're going to end up breaking something by the fourth quarter of this year. And we're going to see a really nasty economic contraction.
Well, I could say that from watching everything I've just watched just recently, the conservatives are anything but, and the Democrats are definitely all about the spending. So it seems as though we have found one bipartisan issue for both parties, and that's printing money and spending more money. That seems to be the one thing that they might say, hey, I don't want to do this, but I'm going to do it anyway, and it's still a win. So I don't see any light at the end of the tunnel when it comes to trying to come to conservative responsibility when it comes to finances in this country whatsoever.
None.
All right. Well, that's going to wrap it up for us today. We appreciate you dropping by one more time, and we'll see you next week.